Hello, everyone, and welcome to Market Monday. It is Nathan Graham, that house guy with eXp Realty, a part of that house group. Thank you very much for taking time to tune in, whether this is on my newsletter, on my YouTube channel, or on social media. Please, if it's my YouTube, like and subscribe. If you like these videos, share them with friends. What this whole channel is going to be about is just bringing you market information, market interpretation. To give you an example, late last year in November, I was showing a rental to someone who basically was stating that they didn't want to buy because according to everything they heard, the market was going to crash and crash more. Had they bought in that November, they would have been in a much better spot than today because home prices have come up quite a bit since then. And really, it was just because they were getting bad advice from the news, from people not tracking data, and all the rest. So let's dive into what is going on this week. I was originally going to start off with this page, but I have changed my mind last minute. Just give me 1 second. Share this tab instead. Okay. So this is going into February stats. March stats of what we get to see, and then the February news that came out. And some of the key things, this is all of Treb, includes Durham, Toronto, and all the surrounding areas. Some of the key things, though, that I'd like to quickly highlight here is, if you can notice in the bottom corner here, the sales have decreased by 4.5%, which means we have some more buyers sitting on the sidelines, kind of holding off. New listings are up, though, 15%, and active listings are up 23%. Now, typically what we see when this is beginning to happen is this is more supply than demand, yet the average sale price is still up 1.3%. It's a very sticky market. So I would have actually kind of predicted the opposite. I would have said higher active listings, less sales, probably dive down a little bit, but we are definitely not seeing the case. We're actually seeing the sellers hold on to that price. Now, this is for a couple of reasons. I believe, I think number one, sellers know that the rates are about to come down and that we are about to enter into more of a seller's market. So that's why they're holding out on their price. One thing we do happen to see in Ontario a lot of people don't sell because they have to. They sell because they want to, whether it's cashing out, moving, upgrading, downgrading, whatever case may be. And because they're not selling because they have to, it gives them the ability to hold on to their price and hold out a little bit more. I do not predict this trend to last for long, though, as we're going to talk about some of the market data that we are beginning to see for price ranges. And actually, I'll zoom up here. If you look in this left corner, so for example, our economy is still growing, but very slowly. Not great news for people who are losing their jobs. Great news, though, in terms of interest rates beginning to come down soon. Unemployment surprisingly went up, and it went up by a big jump. This was something that even the experts weren't expecting, this sort of jump, and inflation came down. So these are two of the leading indicators for reducing prices. And we won't even get into how much that drives me bonkers, that essentially people have to lose their jobs for things to become cheaper. But regardless, we're not going to dive into that right now. Having said that, the key indicators are showing that the whole economy is slowing, and we're going to back that up with a little bit more data. Well, let me share this tab here. So this is a great spring housing market surge, unlikely as affordability costs of living weigh on the buyers. Normally, what we've seen the last few years is we've seen spring markets really spring into action. We've seen a lot of upward pressure in prices. Again, we're still seeing upward pressure in prices. We're also usually seeing a lot more purchases, a lot more sales. We haven't seen that come into full effect yet. In this article, and I will link the article again, they are expected in April to hold rates. I know I've been talking about a small chance of them cutting in April. That small chance still exists, but we are likely more looking at June now. Unfortunately, I have to hedge my bets that way if I were a betting man. But we are, and we're going to see some modest cuts at the beginning of the year. We're not going to see massive ones right out the gate. We're probably going to see a quarter of a point to begin with. Certainly keeps buyers cautious throughout the spring. So when buyers know that cheaper rates are up and coming, this is what's kind of keeping them on the sidelines. Although, here's the key point and where I stole it. This is akin to a coiled spring. Noting sales activity and price typically jump when there's a shift that jolts the market, such as an interest cut rate. There's significant pent-up demand out there, particularly in Ontario and BC. So it just takes a bit of a spark. And I cannot stress this data enough, especially to buyers who are sitting on the sidelines right now, or people looking at maximizing their investment portfolio. For example, I have one client right now selling their duplex here in Ontario and buying two properties in Alberta. Now is kind of this time to be making those moves. We are in a predictable market. Prices aren't skyrocketing, they're not dropping. Homes are still selling within a week or two. Uh, it's a very, very great predictable market. One thing I will say, kind of to this housing activity, the other thing we're noticing is homes that were sitting on the market for 70 to 75 days that were listed, say, last October, November, December, are now being sold in the cottage areas. So this is a sign that the market is beginning to turn, and that is exactly what's happening. But it is a coiled spring. I'm pretty sure if you've been following these videos, you keep hearing me how it's heating up, and same thing right now. It is heating up. We don't know when this is going to explode. I can tell you that it is very likely that the second they say interest rate cuts, or if news is very favorable coming out of the April meeting on this Wednesday, we can see things begin to shift. Now, as a side note, don't listen to a lot of the FUD out there. You're going to hear people and governments and all the rest, like I think Doug Ford came out on last one saying, we need to cut those rates. We do not want governments dictating what this is. This is our economy. What we really hope is that the government responds to the economy and stops reckless spending to help the average Canadian get back on track. That's the desire, but we don't want governments to be able to dictate rates. Otherwise, we'd be in a lot worse of a scenario right now. Let me tell you. People have gotten comfortable, are used to making payments in these higher rates. This is starting to come back. So again, over the last 2 years, people have started to get comfortable with what's going on. This is not to bring back some horrible flashbacks. This is the new norm. People are getting used to what we're seeing. Out west, we're seeing activity cooled in the market, in the Vancouver real estate. Again, coiled spring. Just remember that, please. If you're on the fence about looking to buy, whatever case may be, and let me show you the data why I think this. So first and foremost, we're looking at the 5-year bond rates. We've been following this, and if you've been following this channel since December, this hasn't, like, we saw kind of this from 4.0 drop to about 3.2, and now we're hovering in this middle point. This is what affects your 5-year rates. Okay, so I want to back up before we talk about this interest key rate. For those who are new to the channel, bond rates are essentially a predecessor or precursor to what our 5-year fixed are doing. These rates that they're talking about on April 6th, that has to do with more of your variable rate, your credit card debt, your loan debt, things like that, okay? So these bond rates, if I just go year to date, again, we started off a little bit lower. We spiked, we valued, we spiked, we valued. Higher lows, lower highs is how they say it. This is just creating a point of hopefully we just see them drop at some point here. But we're basically in a consolidational period right now. For this year, we haven't seen dramatic activity. Now, what has this done to our actual rates? If I go to Rate Hub, and again, I'm not saying go to Rate Hub and inquire on these rates. I'm just saying this is a tracker and an indicator. If you've been following a 5-year fix for 4.79, and I know we can actually get it cheaper than that right now. I know we can get 3-year fix. Yet we're seeing more people come on board with this. If you've been following this for a while, there wasn't a lot at 4.8. Now we're seeing more. CIBC 5.04. They were 5.19 a week or two ago. So we're seeing the 5-year fix slowly inch down. These are things that are going to spice our market. And because of the way media works, once they talk about that rate cut, that's, even though these are coming down, that's what's going to create this boom. So sitting on the sidelines is not probably on the buy side, not probably your best idea right now. Okay, so let's break it down so we can hopefully keep this in a 10-minute range. We've already talked about what the market's heading. Please, again, broken record. I know if you're thinking about buying, reach out. Let's have a conversation. If you're worried about your down payment or your credit, let's talk about rent-to-own programs. I will see if I can find the article and maybe talk about it next week. In 2025, things are going to massively boom. Like, that is the prediction right now. And I mean, what I mean right now is, like, we're in a hot market. We're going to see prices increase. But one of the big predictions in 2025 is we see them begin to massively increase. I saw one stat saying by 2026, we'll be roughly 15 to 20% higher in sale price than the top of 2022. So be careful of that, especially if you're thinking about buying anytime soon. Anyways, thanks for listening today. If you have any questions, reach out to myself, reach out to your realtor. If your realtor isn't following up the stats, reach out to myself. I'll gladly sit down, have a coffee with you. We can talk this over, or a Zoom call, and all the rest. Have yourselves a great week and enjoy the solar eclipse today. Goodbye.